had another one of those rug pull type moves. I think now going all the way back to February. We've seen this a bunch of times after the markets rallied back. And volatility has dropped. So this was the first time. Second time was right here. We dropped from 273 to like 268 real quick. That's what it looks like on the daily. This is kind of what we have now. I mean, if we think about this from a bigger picture perspective, we have lower highs on the bounces. And really what would change the tone of the market is a move above 270, 271. It's spending some time here. And I think people would feel confident would get a move back up to this area here. Let's see if this 280 held, which was the high from off of the initial down move in February, the 278 to 280 area.
Yep,
in terms of the downside,
February. Nice.
In terms of the downside, 262, we did get below it yesterday. We double bottomed and closed right at 263. So I'm going to see if this kind of holds here. Get some sort of narrowing in this area here. We'll play like if we get some compression over the next couple of days, Wednesday, Thursday, maybe Friday, we break out of that. Let's go back to the 30-minute. Actually, yesterday the bottom was, I thought, was pretty routine. Overshot the, this was the support area right here. I thought, looking at the higher time frame chart, was right here. We plowed through it. We came off $2, had a nice quick dollar bounce. And then after the flush through the low, you get the big green bar. So that's one of the most common bottoming patterns. Sometimes you get a higher low, but quite often you get the big red bar through. You'll see the big green, and then that'll lead to a retest of this, and then maybe even go to the breakdown area. And it almost didn't quite get back up to 263.40, got to like a quarter. In the after hours, it was there. So we have a pretty good range to work with now. It's a $2 range. So that's how I'm going to start the day. And also right at the end of the day, we did flush through 262. We were below that in the pre-market. So these are the spots I'm looking at on the downside here and here. And on the upside, of course, 263. And it's 263.30 to 263.40. And we'll see if we get a narrowing of a range today on fading these areas. I'm short a little bit from just a little bit from the after hours, 263.25. IWM didn't get hit nearly as hard. A lot of the damage in the market was those large cap leaders got hit, and so that has a more impact on the SPY. So 153.5 is the spot in IWM. I wasn't paying attention to it there. That's the spot. I went through it by a little bit. Went through about a quarter below. I'll be using 155 as potential resistance now. This little band right here. If the market rallies over the next couple of days, I would expect IWM right back to 155.80 to 156. Right here. All right, so we got a lot to get to. Twitter had really solid numbers. I did not have my platform on at 6:30 this morning or 7 whenever they reported, or else you could have shorted into the 34, 35 range. I think, if we step back and look at the daily, we started buying it a couple of years ago around 14, and it did a couple of retests, and then it started holding at 16. And the idea here was it wasn't going to go back up. This was kind of takeover rumors. They were looking to sell themselves. That's what caused this. It really wasn't going to turn back up and break this longer-term downtrend until the started growing again, and started to do that, and that's what caused this gap up here above $30. And I think a lot of people traded this breakout, and they got crushed on this gap fill here all the way to 27. But I think if you step back and look at this over since they IPO'd, I do think 35 to 37 here, we could take it a few more quarters of solid numbers and raise guidance to kind of break through that area. So, high 20s to like mid 30s is a pretty good range to work with. So this is where it broke down from a few weeks ago from 34.5 or so. We did get up there earlier. People are going to be buying into 30, 30, 50. I'll zoom in and just take a quick look and see what the pullback looked like so far. But I'm buying into here, selling. I think it's unlikely it's going to get back to 34 today. So 32, 32 and a half. I did short it the other day, I think at 33 maybe. So it did get back down to 30.60. So this is the spot. It's pretty tight. Look, if you want to play a break of this really tight range here above 31.5 and play for moving to here, or break below here for moving to here, that's fine. It's very liquid, and you just have to be nimble and understand as you're playing the break of this that you don't want to get greedy. If you capture, a 50 to 75 cent move in either direction, that's going to be a pretty good move, and then we'll kind of reassess after 10 o'clock where it is. If it's consolidating above 32 after 10 or below, let's say 30.70, you can look for it to stretch to the bottom or the tops of this range I just outlined for you. But bigger moves in either direction, I'm going to have to see a lot more after the market opens. Next one is TER. So TER was down much lower on the report, and they quickly looked at it. It seemed like they were worried about the Apple market. They were going to be hurt there. And then they made one comment on their call about, I forget what the exact quote was, something about they don't expect to see any more weakness in mobile the rest of the year. And that's what caused the bounce back up to 38. So when people see like a move like this, sometimes, even though the stock deserves to go back up to here, people are so nervous that as it gets above 38, people start to sell it. And then it causes it to drop back down. So, we'll see. It's below, it's kind of below 38. As long as it's below 38, there's danger of it slipping all the way back down to 36. I don't think it's coming back down in this area here. But this would be it. If it starts to hold above 38, then you can play it for a move back up to 40. So let's say 38 is our inflection. And then we'll see. Now remember the other day we saw, I don't know what stock it was, but it came all the way back. It was like when we were talking about it in the morning meeting, I think it was probably on Monday morning. And that one filled the gap. What did I want it to do? I wanted to go to the daily. So it's in this longer term uptrend. To maintain that longer uptrend, it really does have to close above 39. As I said, 36 is, if it's holding below 38 and you want to play it for a move into here, I think that's fine. Thank you. Was it Hasbro? Yeah, it was Hasbro. That's right. Hasbro. Here, let's look at the daily. So this was Hasbro, and it was in a longer-term uptrend. And the question was this Toys R Us going to be a one-time situation? And the market viewed it as it was, and it filled the gap, and it's still maintaining its long-term uptrend. So the idea on this one would be flush on the open, gets back above 39, you play it 40, 41, 42. Above 41 would even be more bullish, above closing above the uptrend. Normally trades 2.8 million shares. Easily do 10 million shares today. The next one is EW, and I couldn't really tell. So one of the things I should mention again, we saw Philip Morris get destroyed the other morning, and we pointed out that it was unusual that it was down in the pre-market with how good the numbers looked. Remember, with the tax, corporations got a huge tax cut, and so a lot of numbers are being distorted in Q1 of 2018 because analysts aren't really that good at modeling the impacts, and some of the estimates were off. And then these things will sort themselves out on the next report. So I couldn't really tell. Like, I saw some things that maybe looked a little bit negative, but I saw things that looked okay. I did see a downgrade, so maybe there is something there, but it's down a lot. It's basically down. Here's the daily. It has a history of like large gaps. So, but if you just, obviously 120 is the most obvious spot. The most recent pivot low is this little wick here, which is about 121.5. Did I put that on the sheet? 121.60, I guess it is if you zoom in. 123.60. So right now the offer is 123.5, which is basically this right here. And so this is kind of what we have to start with. 125. I put that on the sheet? Yep. Okay, so this is it. It's like 121.5, 125 here, and then we'll kind of see. And again, it's such a large gap, and maybe we will get this. You get one of these. It's certainly okay to look for the failure at 125. You get your hold below 124 after that. You can play it down to the 121.50 level, and if it turns out to be really weak, 120 is the natural whole number divisible by 10. And then Boeing, which, as you know, I've had for a while. I did buy a little bit yesterday in the pullback to the 220s. I'm glad I was patient on that one. It dropped $20 from the high. I already dumped everything I bought between 337 and 339. I just, after what we've seen, like with good reports and things getting killed, I just don't trust. Now, if it spends the morning, if it gets back above 336 and you get a consolidation here and I can risk $1 for a move back up to 339, 340, I'll give that a shot, but not a lot of size. What do I have for support? 32 did I use? Yeah. So I got out of 90% of it in this. I almost thought about flipping it short. I didn't have the heart to do it. It did drop $5 from there. Originally, my thesis getting involved below 320 was this would work its way back up to 380 to 400. The numbers looked really good to me today, but I'm not as sure now with wasn't like they really like crushed on the guidance. Here's what the daily looks like. Obviously still in a huge uptrend. It's kind of floating below this below this medium-term uptrend. Obviously the vertical, and it just came down. I was fortunate enough to wait for it to flush below 320 to buy it, so I think I got it on this wick day here, and it retested where I bought at 312 this day and closed above 320. Yeah, until I see some closes above 336 and another clean break of 340, and then I'd want to see some closes above 340. Closes above 340 of a week or so, and then a break to the upside, then I'd feel pretty good about it working its way back at least to the 350s. But I'm not I'm really not actually thinking 380 anymore. For those of you who do longer term swing positions. EDU was the best on the open in terms of how we outlined it in the morning meeting. Wanted to short it into 96. It's got a pretty big range. It's another one that's been trending higher, and versus some of the other ones we've looked at going to the bottom of consolidation ranges, this one was going to the top. It's just the opposite. It did come off a few dollars after it failed at 96. It held the morning low. My trailing stop got triggered on the remaining shares. I didn't have alert at the morning low. That's my bad. There was a lot going on there yesterday. You could probably just have a script to run, trigger alert, price alert when takes out low of check high for, this is what the alert would be like. First 15 minutes, find the high price and the low price, and then just give you an alert if it gets above the higher, below the low from 9:30 to 9:45. That would have triggered right here. And it could come off $3. I do think it can go back up to $92, $93. So I would watch to see this morning. Number one, if it tests yesterday's low and holds that, then you could play the 90 to 88 range. But if it gets back above $90 and consolidates and breaks to the upside, I'd be looking at a move at least to 91.30, maybe even all the way towards 92. And then Caterpillar. So this one was a really good long on the open, and then the CEO said some really stupid shit. Apparently he's a very good CEO, but he just said stuff you don't say, and that caused this damn move. I tried to play the bounce here. I think it was a little early. I don't remember exactly where I got in. I sold into this pop here to 48.49. I didn't short it at 50, which certainly I saw Shark do is not a bad idea at the start of a down move. This eventually came into 45, and it was just so weak. I did see the support on the daily down here, but it was holding below it, so it came back up to it and failed. For me to change my bias on this back to the long side again, I'd really have to see it trade below yesterday's low and then have kind of a strong move back up above it. And then I'd want to see it get above 45. And then I'd start to think about a move back up to 48.50. Right now, sellers in control. And then 3M, I thought this was another one that was pretty good on the open. I played it into the long-term support right on the open to 201. We had 201 by 200 for long-term support. It did pop back up. I started shorting it into 204, 205, and that worked really well. Playing it off that support and flipping it back to short at the pre-market support, that became resistance. So that's kind of classic. And then I was a little bit tight on my trailing stop because it held here at 202, and this green bar here triggered my trailing stop. And then eventually it tested 200, which even if you wanted to get long against 200, that was fine. The way the market was acting, I didn't do that. It did come off another $3, and then it did move sideways and test 197 3 different times. So I think actually Aaron may have put this in the chat for reversing, I'm not sure. But it held here, it got above 198. That's a reversal pattern. You play it back up to where it broke down from. It actually took that out and went all the way back up to 202. That's pretty good. You can get, this 200, use that as an inflection into 202. You can play that. If it's holding below 200, you want to play it down at 198, 97, that's fine. There's some trades there. Then we'll kind of see what the next big move looks like. So there's a lot going on today. Twitter is going to be my primary focus initially, just so liquid and easy. SPYs are almost back to... the other thing is I still have a large put position in Netflix, so I did start to buy some calls yesterday. I was hoping they would open down here at 304. My strike is 305. And ideally, it would close below 305 on Friday. I already took off about 20% of the puts. Probably today, late in the day, depending on where it is, I'll take off another 20%. The risk's already covered on the trade. Yeah, so you might see me doing some funky things. I've hedged off. Yeah, right. CHEK. So CHEK, now that it's gone up a few days in a row, is certainly you can start to look for the short trade. Obviously, day one, when you notice it here, you look at the long. The next day, if it gets above, I think yesterday Swang told me he made a bunch of money into this move. I'm not sure what, I think people started to short into this here yesterday, but it's above that. But now we got some good prices to work with. But basically the way this works, and I'll try to locate some, this one looks like it's worth it on for the short, is you want to see some sort of failure. Maybe that's like $19, $20. You short some, and then you want to see the hard down move below yesterday's high from like below 17 comes into like 15, this area here. Then you short like retracements to like 16 in this area here. And then you just play it for a move all the way back down to like here or something like this. $8 to $10. So yeah, I mean, I think it's ready. I generally avoid these until they've gone completely vertical. In this case, you got the triple here, and you got the gap up this morning, short a little bit between 19 and 20, even 18 is probably okay. And then you wanted to see that first big red bar, and then short the retracements and cover some at opportune points, and look for the move all the way back down at $10.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important, and how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.